Banks burned once by the mortgage-backed securities that hobbled the global financial system are buying them up again. Are these banks running the risk of a dangerous deja vu? We're asking a former U.S. Controller of the Currency, Robert Clarke. He's now a senior partner at the law firm of Bracewell and Giullani. Now, Robert, we've been talking about this morning. One of our earlier guests saying that the prices are so low here, and now that we've got some data, we understand the performance of these mortgage-backed securities. It is safe for these banks to dip their toe into the water once again. How do you feel about that?
Well, I would agree with that as long as the assumptions that the person has made. I think it all depends on what you're buying. We all know that some of the mortgage-backed securities, particularly the prime mortgage-backed securities, have always been very high quality. They are some of the best mortgage-backed securities there are. They are not the toxic waste that everybody has referred to, but they all got dumped in the same pot, and the market fell out of bed for them. And as a consequence, banks had to make margin calls. They ran Thornburg Mortgage out of business as a result of that. They had to mark these securities to market, even though there was probably not one penny of loss in them. I think it really depends on what the underlying mortgages, what quality the underlying mortgages are.
Now, Robert, at the same time, though, it's not as if the underlying fundamentals to these jumbo loans doesn't continue to deteriorate. Standard & Poor's just yesterday downgraded a whole chunk of jumbo mortgage bonds, did the same thing back on June the 8th, and Moody's has been warning for months that the fundamentals continue to deteriorate with the decline in housing prices and the rise in the unemployment rate.
Well, I don't want to insult the rating agencies, but I would say that based on the performance that we've seen in the past on the rating, I would take some of those downgrades with a grain of salt. On the other hand, some of them may be entirely appropriate. The problem we had before was that people did not look at what they were buying. They did not look underneath the surface to see what the quality of the mortgages is or was. And I hope if they're doing it today, and you're right, the prices are very attractive. It's very tempting to get back in, but I hope they will not just willy-nilly buy them the way many people were doing back a couple of years ago.
Robert, that's a very fair point on rating agencies. One question, though, from a taxpayer interest standpoint, wouldn't we rather these banks borrow money from the Federal Reserve at below market rates, which they're able to do, but then turn around and use the money to make jumbo loans as opposed to buying securities backed by jumbo loans that already exist?
Well, I think you probably want them to do both. I will say one thing, that if, you know, one of the problems about borrowing money from the Fed is that, yes, the interest rates are low, but the regulators are looking very skeptically at any kind of borrowing from anybody, from the home loan bank system, which was really set up to provide that kind of liquidity to banks, to the discount window. If the banks are going to do that, and I think it would be desirable because there is a shortage of availability for prime mortgage loans, the regulators are going to have to get with the program and quit criticizing the banks for using these liquidity measures. There are only so many deposits out there, and they've got to get their liquidity from someplace.
Robert, I have one more question for you before we run out of time. You're a former controller of the currency. The president's regulatory reform plan for financial services preserves what some people call a patchwork of regulation. They're only eliminating the Office of Supervision, Thrift Supervision, and creating a new regulator. How do you feel about that? Is that the way to go about solving our regulatory problems?
Well, it doesn't seem to me, if you don't like the patchwork that we have, that the solution to the problem is to create yet another federal regulatory agency. We already have federal regulatory agencies that are responsible for consumer protection. And as I have said many times, what needs to happen is the people who have that responsibility need to discharge it better than they have in the past. We don't need a new regulatory agency.
All right, Robert, I want to thank you for... sorry, go ahead, actually. Keep going. We've got a few seconds left.
Well, as far as the OTS goes, I have said, and the director of the OTS at the time I was controller said, both of us were in total agreement that it made sense to combine the two agencies. but it also made sense to combine the two charters.
Robert, I'm afraid I have to cut you off. We've got some headlines. That's Robert Clarke of Bracewell and Giullani. Thank you.